Stock market crashes don't happen out of the blue. There are warning signs that savvy investors can spot before the big plunge. Let's dive into the red flags you need to watch out for. First up, rising interest rates. When borrowing costs go up, it puts pressure on stocks. Companies find it harder to finance growth, and investors start looking for safer options. This can be the first domino to fall in a market downturn. Next, keep an eye on employment numbers. Spikes in unemployment and widespread layoffs can trigger panic among investors. When people lose their jobs, they tighten their belts, leading to a rapid decline in consumer spending. This weakens company earnings across the board, further fueling the downward spiral. One classic recession indicator is the yield curve inversion. This happens when short-term bonds offer higher returns than long-term ones. It's like the financial world turning upside down, and it's often a sign that trouble is brewing. Watch out for unusual market volatility too. Big swings up and down can signal that fear is on the rise. When investors get jittery, they make rash decisions, amplifying market instability. Tech and growth stocks are often the canaries in the coal mine. These high flyers tend to crash first when sentiment shifts. If you see the darlings of Wall Street taking a nosedive, it might be time to reassess your portfolio. Be wary of media hype and too good to be true optimism. When everyone's talking about how great the market is and how it can only go up, that's often a sign you're at the peak of a bubble. Remember, what goes up must come down. Global events can also spark chain reactions in the markets. Wars, energy crises, or major policy changes can send shockwaves through the financial world. These external factors can be the trigger that sets off a larger crash. So, what's a smart investor to do? Prepare. Don't panic. Diversify your investments, keep some cash on hand, and avoid making emotional decisions. By staying alert to these warning signs, you can protect your wealth and even find opportunities in the chaos. Remember, market crashes are a normal part of the economic cycle. They're not the end of the world, but they can be painful if you're caught off guard. Stay informed, stay calm, and you'll be better equipped to weather the storm when it comes.